Bloomberg Audio Studios. Podcasts, radio, news. You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
This is Bloomberg Intelligence Radio. We are broadcasting to you live from our interactive broker studio right here in Midtown Manhattan. All right, so 2 days later, we finally get GM's conference call slashing guidance with up to $5 billion hit from tariffs. Joining us now, David Welch, Bloomberg Detroit Bureau Chief. David, I thought that these offsets that were announced on Monday or Tuesday, I forget, my time has no meaning, were supposed to help this part from the administration.
They did. I mean, some analysts had the hit to General Motors from tariffs being as high as $10 billion.
Oh. Wow.
So it did help some, but you still have a 25% tariff on imported vehicles. This does help offset some of the parts tariffs. And I think what GM's hoping for here is that eventually the Trump administration gets trade deals with South Korea, for example, and something new with USMCA, because that's where GM's really taking a big hit here, are those countries in terms of where they get imported vehicles from. And so it's $4 to $5 billion. $2 billion of that is from the vehicles they import, and the rest is parts. So if the auto industry wants to escape a heavy hit from tariffs, there's still a lot more to be done in terms of either resourcing parts or getting some new trade deals.
So, David, is the expectation this kind of a worst case scenario, or is the company positioning that as, hey, this is kind of what we know and this is kind of our best guess?
It's what they know based on the structure of the tariffs right now. So if, let's say, next week, the Trump administration cut a deal to lower tariffs with South Korea, GM gets a couple 100,000 vehicles, all entry-level models, from its factories in Korea, that would lower this burden. If they got something that would reduce the tariffs on the non-U.S. parts in vehicles GM makes in Canada and Mexico, that would also give them some relief. But right now, those are the so-called fentanyl tariffs with Canada and Mexico. Those are still hanging out there. Those are still in force here. So they would need something that would either lower that or get rid of those to really get this burden down, unless they start relocating vehicles and doing things like that.
Hey, David, earlier, the Wall Street Journal reporting that the board at Tesla may have started efforts to take a look at a search for a new chief executive officer to succeed Elon Musk. What's your take on that?
The company denied it. I always wonder about these things when there's a story written with conviction and then a denial with conviction. You do wonder if maybe some people on the board started talking to other executives or executive search firms out there to get some ideas, but it wasn't maybe an official board search. That's me speculating. But look, Elon Musk has a lot of interest here. And this has always been an issue with Tesla shareholders.
Yep.
And this is well before he was in the Trump administration and politically active with Doge. He had the Boring Company, of course, has SpaceX. Then he got Twitter, now X, and he's got Tesla. And then you add into it a big government role. And this is somebody who has a lot of different things going on. And when Tesla starts to struggle, shareholders and the board has to do its fiduciary duty if shareholders are asking questions. Maybe they're asking questions about when this guy is going to come back in the chair. And if he's not, then they need someone who's going to really take a look at getting their sales turned around.
If Elon Musk goes back, as it looks like he will, to Tesla, does all the problem just go away?
No, it doesn't. I mean, Tesla's got some real issues here. The product line's very stale, right? Most of these vehicles, the Model S goes back 12 years, and the other vehicles in the lineup, with the exception of Cybertruck, all kind of carry the same basic styling on the exterior, right? So nothing looks fresh. The Cybertruck is obviously very fresh and different, but it's a niche product. It's an expensive pickup truck that a lot of people think is pretty weird looking. So this is a company with stale product, a lot of new competition from the Korean automakers in the U.S., from General Motors, heavy competition in China. European automakers, especially on the high end, have a lot of new EVs in Europe. So they don't have an oligopoly like they did 5 years ago, and they just haven't freshened up the product line. And then there's the AI and the autonomy strategy of Tesla's. I think that's going to take a while. It took Waymo a very long time of testing vehicles on public roads to actually launch a service. Tesla hasn't done any of that yet. So you're looking at turning around a product line that's pretty stale in the face of tough competition, and you're looking at going from an announcement last year on autonomous vehicles to robotaxis on the road, which took Waymo about at least a decade. These are things that are difficult to do, and getting an active CEO back in the chair helps, but it's still a lot of heavy lifting to get those initiatives going.
All right, David, thank you so much. Appreciate it. A lot going on in the world of the automobile. David Welch, Bloomberg Detroit Bureau Chief.
You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts, or watch us live on YouTube.
All right, let's get more on Kohl's here. That stock readjusting after we saw the CEO being ousted from inappropriate behavior and a probe that uncovers personal ties to the vendor. Yep. But overall, the stock's not done well, as Nora was saying. Mary Ross Gilbert's Bloomberg Intelligence Senior Equity Analyst who covers retail for us. Hey, Mary, if we just take out this 10% pop on the CEO ouster, how is Kohl's actually doing?
So that's a good question, Alex. So really what's happening here, yes, we had the news that the CEO was ousted, but that's big news, right? Because now we have Michael Bender stepping in as CEO, and he's the fourth in under 3 years. But let's give you a little bit of a backdrop. Since 2021, when the company added Sephora shops to their stores, their revenues have fallen $2.2 billion. But in the meantime, Sephora added $1.8 billion. So that means that their revenues are down almost $5 billion away from beauty. So that kind of gives you the backdrop of what's happening operationally here. And with these different CEOs, nobody has seemed to find the formula how to get back to growth. The reason why the stock has popped today is really because they came out with their first quarter preliminary figures showing that their comp sales were down 4 to 4.3% when the company was guiding down 6% and consensus was at down 6.4%, and earnings were even higher. So what I mean by higher is from an operating income perspective, consensus was at $6 million, and they're guiding to somewhere around $40 million. So that's much better. And so from an EPS perspective, the loss is going to be about half of what analysts expected, and that's really the pop. And the good news here is that the company is rich in real estate. And so if you look at the potential value of the real estate holdings, which could be nearly $6 billion, and if you look at their stock and where it's trading and how it's valuing the business, that's under $5 billion. So that kind of gives you sort of a framework.
When you start going to the value of the real estate, then the business
that's never a good sign.
In trouble.
Yeah.
We did that with Macy's and the value of their air rights in Manhattan. That's not good. So, Mary, what is Kohl saying? What are some of the retailers that you cover? What are they saying about tariffs, their ability to manage tariffs, how much they will take in their profit margin versus how much they'll try to pass along to consumers?
Paul, you're right. Tariffs is really a big issue, and there was no commentary regarding that, neither in this call and neither in their fourth quarter call. But we do know that roughly over 30% of their revenues they directly import. So there is going to be a hit here or some sort of exposure. And we're still early in the earnings for the first quarter, because that's where we're going to really get an update. Because when these companies reported their fourth quarter earnings, we were talking about tariffs in that sort of 20% range. And now we're at 145 for China.
Yep.
So yeah, so we're going to learn more, obviously, when we get the call. But for now, there's not a lot of disclosure around it, but we do know there is an impact.
All right, Mary, thank you so much. We always appreciate getting your thoughts on the global retailers here. Mary Ross Gilbert, Bloomberg Intelligence Senior Equity Analyst. She covers the retail space.
You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
One of the big stories here today from an earnings perspective is Facebook. Some of the kids call it Meta, META. The stock's up 6% here today on some pretty solid numbers. And you want to talk about this company, there's really only a couple of folks you want to talk to. One of them is David Kirkpatrick, founder of Techomony in New York. And of course, he is the author of what I think remains the definitive book about Facebook in the early days of Facebook. It's called The Facebook Effect. It's a great book, highly recommended. Hey, David, what do you make of the numbers coming out of Meta these days?
Well, thanks, Paul. Thanks for your nice comments. Well, Meta really is a kind of bellwether, I think, for what's happening with the digital economy. And their numbers were quite surprisingly good, almost spectacular, you might say. I mean, they've been delivering very steadily for a long time. But I think that the most important thing that their numbers indicated and the comments that Zuckerberg made yesterday indicated are that, this very crazy, unpredictable economic environment we're in right now, which you were just discussing regarding retail, is not likely to affect these companies as much as some feared, at least in the near term. And that's really good news. There's a whole lot about AI and other stuff that we learned about what they're doing that was quite spectacular also.
Yeah, so let's get to that. So as you mentioned, the advertising business, which is 98% of the company's revenue, has continued to grow. So check that box. Let's get to the AI, because they unveiled a new standalone AI app called Meta AI. What is that? What's it going to do for me?
Well, thanks, Alex. Meta is one of the top players in AI. There's no question. And they are spending an extraordinary amount on this. I mean, they upped their capital expenditure estimate to up to $72 billion from a high of $65 billion. And that's like a huge percentage above last year, which was under $40 billion. So they're really, really cranking really hard on data center investment and AI. And what they want to do is they want to compete head-to-head with ChatGPT and all the other Claude, et cetera, all the other AIs that are directed particularly at consumers. And they have a unique advantage in doing that because they have this extraordinary, unique trove of data about all of us that they have been accumulating for decades. And they can use that in the training of the AI to customize and personalize the results they give to people in a way that could be a major competitive differentiator down the road. And of course, they'll use it in all the normal ways. They bring it into a WhatsApp chat, et cetera. But they, I think, are extremely well positioned to become a very, very major force in especially consumer AI.
And Alex, at cocktail parties, people often come up to me and say, hey, Paul, give me an example of AI. And the example I give is just what David explained here. So a lot of these advertising companies like Google and Facebook, they can really get to know who the consumer is better and better and better, and then charge more for the ads. I mean, and that's kind of what I think we're seeing.
Right. Well, that's
here.
true too.
Yeah. I mean, it's also
they're customizing the ads using AI. That's a thing I didn't even mention. I'm talking about the results before, but the ads themselves will be far more accurately targeted, and they're already doing that tremendously often.
And isn't that just like free training, because you have all the input from Instagram and Threads and Facebook and all that?
Absolutely. They have the best, one of the best training, maybe the best training corpus for consumer AI that anybody has. I mean, this is the thing that has differentiated Facebook and Meta from the beginning, was the depth and volume of their data about individuals. It continues to get more and more rich, and they're figuring out new ways to mine it in the age of AI, and that is going to be a huge advantage.
Hey, Dave, you look at this stock chart since its IPO, the only thing that's ever derailed this stock has been the metaverse. What's the latest on that whole thing? How are they positioning it?
Well, they don't talk about it nearly as much as they did. But, I think what they're finding is that there may be an overlap between the metaverse and AI. And, they're one of the things that I'd say they got into because of their metaverse obsession is hardware. And they are now saying that their hardware business, their Ray-Ban AI glasses, their Quest gaming and other virtual reality headsets, those are going to be an incredible entree into the world of AI. And I think what we'll see is that they dovetail their work in metaverse, in immersive content with their work in AI. I don't think we can exactly predict how that's going to happen, but certainly, glasses that sort of look at the world around you and give you answers and information about everything you see, that's something we can all use, and it's starting to happen. And they would not be in that position had they not made that many, many tens of billions dollar investment in metaverse. Now, was that a good investment? I don't know. I don't think Zuckerberg would today say that metaverse is their future the way he did not very long ago. Clearly, AI is the future, but there will be an overlap.
Just some breaking news here for you. Apparently, the U.S. is now weighing easing NVIDIA chip curbs on the UAE. This comes as Trump is planning a visit to the region. Apparently, it's his first overseas trip aside from going to the Pope's funeral. Okay. So that is definitely quite interesting. NVIDIA and other tech companies have been pushing for this U.S. rule change, and President Trump is set to visit the UAE on a Gulf trip coming later this month. All right, David, we're going to leave it there. David Kirkpatrick joining us, one of the best. He literally wrote the book on Facebook, founder of Techonomy, helping us to break through Meta earnings. Here's my question. Oh, wow, went away. Look at that question. Well, NVIDIA. NVIDIA got a sell rating yesterday from Seagate.
Really?
Did you see that?
I did not see that.
Saying that AI is priced in and their customers are going to start making their own AI chip.
Interesting. The stock's up 5% today, so a good move here. And again, seems like when you think about these tariffs, I think what we learned from the first Trump presidency to now is a very fluid situation. There's an announcement, then there's some negotiation, then there's some walk back, there's some change, and you're not really sure where you're going to end up. I just go back and look at kind of how everybody behaved back in the first Trump administration. Stock market did okay. I mean, it's just everything. It just relax.
Still, but the UAE is not China. And
I know.
I don't know.
I would suggest maybe those conversations are ongoing, and we'll see. But I tell you, it gives us something to talk about.
You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
Let's check in with the professional here, Marcy McGregor, head of portfolio strategy for the CIO at Merrill and Bank of America Private Bank. I like keeping the Merrill name, because the Merrill name is one of the great names on global Wall Street. It makes the title really long.
It
makes the title really long, but I would have kept Merrill in the name. I worked at Merrill Lynch, so the thundering herd, all that kind of stuff. I tell you, when I worked at Merrill as a banker, I felt like we could get any deal. I don't care who I was competing against. I felt like we could beat them, because that's how good I thought the Merrill folks were. So, Marcy, thanks so much for joining us here. Boy, volatility, I mean, if you like it, this is your kind of market, I guess. What kind of conversations are you having with your clients these days?
Yeah, I mean, we're trying to help our clients kind of navigate through what I think of almost as this dense fog of uncertainty, of course, on the policy front, on the macro front, and really trying to get our clients to take a step back, understand that being really well diversified, being really disciplined in a market that can probably continue to feel choppy from here is the most important thing we can do with investors. So I say, like, stay diversified, stay invested, really stick to our knitting here. This fog will lift and we'll be able to see through to the other side.
When you say diversify, everyone says that. What does diversify mean to you over there at Bank of America Merrill?
Yeah, when I think about our portfolio positioning right now, we do have a preference for equities over fixed income, and it's global equities. So we have a pretty significant strategic weighting, both to international developed equities and emerging markets. And then on the fixed income side, we're actually not taking huge positions on the fixed income side. We like to use fixed income as a diversifier, kind of as that ballast of the portfolio. And then, of course, for our clients that are qualified investors, alternative investments, makes a lot of sense. Private markets makes a lot of sense in a well-diversified portfolio. And of course, those big overarching themes. So yes, we're in this moment of, I think peak uncertainty is behind us, fortunately, but we're in this moment of uncertainty about what the economy looks like going forward. But I think there's a lot of trends and themes that aren't changing, like the innovation in our economy, like investment in infrastructure, data centers, areas like that. I don't think those big picture trends are necessarily going to change because they're so long term.
Marcy, we've seen over the last, just here in 2025 and maybe late 24, kind of a move into international equities, maybe even fund flows, material fund flows out of the U.S. market into other parts of the world. How do you guys think about the U.S. versus non-U.S.?
Yeah, when I think about international markets, certainly a dollar coming off the way I think of it, like the eye-popping strength that we had seen recently. So we have this dollar that's moderating. Our view is that the dollar likely continues to moderate from here, really kind of lending some support to international markets. But what keeps me from getting outright bullish outside of the U.S. is we haven't seen the earnings come through. While the U.S. earnings picture expectations have clearly been trimmed over the last several weeks, we still think U.S. corporate earnings stay positive in terms of a growth rate through all of this uncertainty. So I need to see the green shoots on the earnings side to get me a lot more positive on international markets. But a dollar that is moderating, I think, will likely continue to help international from here, probably for the balance of this year. So the answer is I want to own both, but I do still have a preference for U.S. relative to the rest of the world.
What about other themes that we've seen? Like energy has just gotten crushed. Utilities were kind of rising with the AI play. They became a growth story, even though they're also considered a safe haven. What about those trends we were looking at like 8 months ago that now have kind of fallen off by the wayside?
Yeah, well, it's really interesting. If we rewind before April 2nd, this market weakness really started as a rotational correction away from kind of the most overvalued, expensive, magnificent 7 tech names. So our view had been it would be the other 493 that led the way for 2025. And that's still the case. I think it's going to be this broader market participation. We're talking to clients about playing defense and offense. So defense, as you mentioned, still looks like utilities, a way to kind of think about playing that defense just through the S&P 500. I also like dividend paying stocks, especially in a world where we're wondering if the Fed will or won't cut as the economy shows signs of softening. I think dividend paying stocks and dividend growers is going to be really interesting. When I think about energy as a sector, it's the only sector I think that's in negative territory in the most recent period for the index this year. I'm a little cautious on energy. I do think when I think about what else could come from Washington to provide a little bit of a cushion from growth, lower energy prices would be a boost to the consumer. We need the consumer to stay resilient here. So I would think about so I'm less positive on energy. The area of the market that I think has the potential to continue to lead as we get to the other side of this uncertainty is financials. Financials are going to be insulated from some of this trade noise. As long as the consumer hangs in, and our base case is that the U.S. economy avoids a recession, I think that tees up financials, which have pretty strong internals, to once again emerge as market leadership. But to your point, artificial intelligence, innovation, none of those trends are going anywhere. So I think the investment cycle continues as we're in this kind of big picture arms race for technology and AI.
Marcy, my notes tell me that you're based in Savannah, Georgia. Please tell me that's not the case.
That is the case. That's where I
how did you wrangle that?
He's just jealous.
Hugely jealous.
Mm-hmm.
Well, if it makes you feel better, I'm in New York pretty regularly. But yeah, as I look out the window here, I am pretty. I
mean, that might be pound for pound the prettiest city in all of America. It is awesome.
Is it
down there? Yeah, and I mean, she went to Rutgers. Good. Yeah. But then she ends up in Savannah, Georgia for bank.
It's all jealousy.
It's all jealousy. Marcy, thank you so much for joining us. We'll have you back. We really appreciate getting some of your thoughts there. Marcy Gregor, she's head of portfolio strategy for the CIO at Merrill and Bank of America Private Bank from Savannah, Georgia.
I've never been to Savannah.
Oh, it is just awesome. It's a great long weekend trip.
I've heard
from
this.
New York.
Yeah,
it's good. I highly recommend.
This is the Bloomberg Intelligence Podcast, available on Apple, Spotify, and anywhere else you get your podcasts. Listen live each weekday, 10 a.m. to noon Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.